I said we had a special guest today. We just came in and talked about price. We talked about what Altos Research does, why it is so unique and different, and why you must follow it. But now we're going to go from price, which everybody wants to talk about, to a more important discussion that very few discuss. Mike does, I do, and that is actually active inventory. Mike, how you doing, man?
Terrific. This is fun.
Awesome. Yeah. So I know a lot of people talk about price. I know the doomers are all upset because we're not crashing like '06 and all of that. One of the reasons we are not is because of active inventory. So let's talk about what we have today, why it is so unique, where things might be going in video number 2. And then video number 3 will be new listings, which I actually think is the most important thing to track today. But let's focus on inventory. Where are we at?
So as of today, there are about 300 or 435,000 single family homes on the market.
Okay.
That's up a tiny fraction from last week.
Yep. Yeah.
A couple percent. But it's, it's the end of May, it's early June. Like this is when inventory builds. This is when the best inventory should be coming to the market. And so it's climbing a little bit. It's climbing. It's very late to climb this year.
Yeah. And I think that's something we need to focus on because, somebody else that I follow, as do you, Logan from Housing Wire, he and I were going back a little bit on Twitter a couple of different times, and he was like, the inventory's coming. The inventory's coming. This is obviously earlier in the year, given seasonality. And again, given seasonality, it should have shown up. And I believe in the interest rate lock-in. He does not, totally fine. But I just think there's a lot of people that are making a family decision to stay put. And thus the normal listings, the life events that make people move aren't occurring. And I got bad news for you. I don't think inventory is going to rise next year either. I think the housing market's broken. But talk about seasonality. When do we usually see the ramp in inventory? Because I think that's important. It's certainly later. And I, again, think it's not coming.
Yeah. So the normal seasonality would have your fresh spring market starts to come actually in January or February. Usually by mid-February, you can start to see inventory starting to climb up.
Yep.
Then certainly by March, April, and May. By May, is the most.
Mother's Day is like the artificial. For me, it's like that's the end. Is that fair?
Yeah. Right. Like these are people like you put your house in May. Let's say you takes a month. You get offered in June. Yeah. It closes in July. You're done by the end.
You're good to go.
Yeah. That's the timing. So, but this year inventories kept declining all the way through the end of April. And so, we were starting the beginning. We started the year at 500, I think, 1,000 single family homes, give or take.
Yeah. Yep.
And in the fall, inventory was rising all the way into November, which is super unusual.
Yep.
Because rates were climbing, the market was stopped cold.
Yeah. Demand stopped. Hence,
demand stopped. That's right. And we didn't have a ton of sellers, but there was no buyers, right?
There were none. It was gone.
So inventory was rising. So then when you look at starting at the beginning of the year, I'm like, well, assume that trend continues, and assume we have like a recession roll in. And that says to me, maybe we get some inventory this year. Like those were
you were hoping.
Neither of those things happened, right?
Yeah, no.
So I was entirely wrong. And so each week, we have a little forecast inventory model, and each week, almost every week this year, we've come in with fewer, lower inventory than the model would suggest. And so now it's June, it's rising, rise by 1% to 2% a week. Last year, at this time, inventory was rising 4, 5, 6% per week. Yeah. It was just, and so, then we started the year with 70% more homes on the market than we had last year this time.
Correct.
Right. Last year was record low. Crazy low. So we didn't have a lot, but it was a lot more.
Yep. Agreed.
And then, but looks like maybe by July, we'll have we'll have year over year fewer homes on the market.
Think about that, folks. Think about that. Year over year, less homes available. Nobody had that on their bingo cards. I did, but not a lot of people did. Because again, I've been telling people, I got receipts, man. I've been telling folks the Fed broke housing, and they've basically made the move up buyer extend, right? The average 10-year last time I checked was 8 years. That's going to be 12 or 13 years. Yes, death, divorce, all of that. So you still do 4 million transactions. We're going to be sub 6 million for years to come, total transactions, because the market's just broken.
Yeah, and the way I look at that is, and you talked about the lock-in.
Yep.
And here's the way I look at lock-in. I like one school of thought says rates are high now, so people aren't moving. If rates would fall, people would move more, and then we'd see more inventory.
Yeah, sure.
That's one school of thought. The other school of thought is it's not about rates, the current rate now. It's about the 2% rates from before. And so the people now aren't locked in, like they're locked into the old rates. So even if you are moving now, it still really makes a lot of sense to keep the old place.
Of course it does. Yeah.
And so then that says to me, in order to get higher inventory, we need multiple years of higher rates where we reset the cost basis for more people, so that fewer deals pencil out, fewer of them make sense to hold. Like you need to resell them rather than hold them for
you become a forced seller. Exactly.
Yes.
Right? It doesn't make equitable. It's not a wise financial decision to keep it because you're negative cash flow.
You're negative cash flow. That's right. And and so, you know, when rates are 2% and you move up, now you're easy to keep too.
Yeah.
Now when rates are 7%, you move up. Maybe you need to sell the 2% one to get your down payment so you get a little more inventory. Now you get 2, 3, 4 years at that rate. And now there's, 12, 13, 15 million people who've got the cost basis higher. And so we get a little more inventory build over time.
Yeah, I wanted to run something by you because, again, the doomers out there are putting out some things that make my brain hurt. And you're in the data, so maybe I'm missing something. One of the things I've heard doomers say recently is we need interest rates to fall to something like 4 or 4.5. That is going to explode inventory, and with exploding inventory, prices are going to fall. My brain hurts tying that together. But when you hear that, can you see it? Am I missing something?
I don't see anywhere in the data any indication of exploding inventory.
Oh, agreed.
And it's so, I think, where could inventory come from?
Good conversation.
It could come from, I think, about 3 sources that it could come from in more of a way, right? If we somehow incentivize the move up, move down sellers. Okay. Which, as you point out, is not happening right now. Like people are going from 8 years in the house to 12. Okay. So nothing there yet. Investors. So investors who say, I need to unload, properties. Maybe it's short-term investors, or maybe it's whatever, like maybe it's Wall Street guys. And what we can see there is, while the investor class, like especially the big dollars you point out, slowed purchases, there's not a selling. There's not a ton of selling.
Technically, they're net sellers, but that's because they sold 37 and bought 18. Is that really going to dwarf the market?
That's how it plays out. Yeah.
Yeah. Again, the doomers talk about, oh my God, the institutional buyers are net sellers. Yeah, they sold 38, they bought 17. If you want to call that net selling, by all means, go crazy.
And I had Gary Beasley, who's the CEO of Roofstock, and Roofstock is that investor purchase platform, and they do business with all the big Wall Street guys. And he said, none of those guys are selling.
Yeah, why would they?
Why would they? Right now. So inventory could come from investors. At this point, even though a lot of them stopped buying, none of them are selling. So no inventory there yet. Inventory could come from distressed homeowners. Recession,
Sure.
job loss,
Yes. For sure.
affordability, those kind of things. And I expected to see, slowing economy this year. The recession signals have been around for a while, and
Sure.
I'm not a recession forecaster, so like your guess is as good as mine on whether it happens. But I was assuming that we would, if you assume some recession, then you get fewer buyers, you get slightly more forced sellers. The distressed inventory really takes a year after the job losses.
That is important. And again, I don't think a lot of the doomers realize that. They're like screaming, Michael, you don't get it. Unemployment's going to skyrocket. Inventory's coming around the corner. I'm like, did you guys crack a book? Reading is good. Last time, which I invested through, all of these short sales and foreclosures in many cities and states averaged 1,000 days. 1,000 days.
Yeah.
So you miss payment number one. First off, you're not in anything until day 91. So you're already 3 months late. Then it's 1,000 days, which is about 3 years. Yeah. So stop telling me this or that. And oh, by the way, Mike, I believe banks have a new tool. I invested through I saw people lose homes. The last cycle, the bank said, we will not negotiate with you until you're 90 days late. Then after 90 days, if you were 90 days late, you were 95% losing your house because they didn't figure out how to, adjust mortgages and all of that. What did we do? What tool do we have now? Forbearance, silent seconds, 40-year terms. Do we not think the bank's going to try that first? This is just wild to think that these people, think that unemployment's going to cause this shockingly increase in inventory quickly. It's not coming.
And that actually gets to a thing that is an underlying factor that I think about here. All of the laws, regulations, tax laws, they're all designed to keep people in their homes. They're all in favor of the people who already own a house.
Yes.
And so those seem unlikely to change.
I would say that's fair. Yes.
Right. And so everything we do in this country is incentivizing the people that are already in the home. And so that seems like unlikely to have to like create a big surge of inventory. And so even though there's unlikely, we also don't see it anywhere in the data yet. Right. Yeah. There are different structures. So let's talk about the opposite side of this. There are different structures now than there were 10, 15 years ago. Absolutely. That like we put a lot more investors in there. Mm-hmm. We have Wall Street investors. Mm-hmm. We have short-term investors. So like the economics for those people could change, and maybe that's where we get inventory.
Maybe. But also a lot of these Wall Street guys and big players, they come in with cash and they turn it into a bond or an annuity. They're already out. They've already got their money back. Now it's some income stream for another set of investors, right? So it's could they unlock those? Sure. Is it possible? Probably not easy, but it could happen because it's an annuity for somebody at this point. And also we have new tools to deal with distress, right? Today you can get a 90-day forbearance with a click of a mouse. Last time, they wouldn't talk to you until you were 90 days late. This is all changing. So if you expect, rising unemployment to create inventory quickly, you're just wrong. You're being misguided.
Yeah.
Even if unemployment doubled tomorrow, we're talking 2025, 2026 before the inventory works through the pipeline. I mean, it's just how the process works.
And then you have an environment where that finally comes, and there's so much investor cash on the sidelines waiting for that.
Just waiting for it. Yeah, they want a 5 or 10% discount. People are talking about a crash is coming and I want 40% off. I'm like, you don't think Wall Street's going to come in and buy that stuff first? They don't need 40%. They'll take 12%.
Yeah. Yeah, you think those cap rates get there and they'll buy everything in sight.
Yeah. And I was buying last time. I remember when the Wall Street came to Fresno. I had a process in place where I was writing offers every Monday. Then the book came out. Nothing showed up one Monday. Then the next Monday, I called my guys who were feeding me deals. And it's like, some Wall Street guy brought the entire book. I'm like, the entire book? Yes, the entire book at list price. Because I would never buy anything at list price. They bought the book at list price. I'm like, oh, the world just changed. That was wild.
That's interesting. Yeah,
Yeah.
and you know, so the crisis that we're facing is not a surging inventory, crashing price crisis. It's the opposite crisis.
Correct.
And it has very different implications for policy, for the country, for the economy. And it is it is, I think, worthy of concern. Like, what should we do about this? And it's a multi-year. It took us a decade of declining inventory with lower rates to get down this low, and it could take us a decade of higher rates to get out of it.
And again, my folks on my channel will know, I don't think rates are going higher. I think rates get to below 6% by the end of the year. So there's that, if I'm right as well. And again, I think we've learned 7 stops demand, 6 brings demand back. Now we got to talk about our third section, which is new listings, which is actually, I believe, the most important housing metric to track today. But before we do that, Mike, where can people find Altos Research? Tell us about the ebook and all the good work that you do.
Yeah, so you can get at altosresearch.com at our website, you can get a free ebook, which is how to use market data, how to use it in your business. You can get free reports. So you go look at local market data. You can go to altosresearch.com and do that. You can follow me on Twitter, Mike Simonson, or the Altos Research YouTube channel. Subscribe there because I do that video every Monday.
Yeah.
And you'll get announcements, and you'll see the deep work that we do. And we do a monthly webinar where we spend an hour doing the data.
Yeah, if you're interested in real estate, I strongly recommend Altos Research YouTube channel. Every Monday he does, because again, remember, we're talking weekly, the most up-to-date stuff. This is where I go and where you should go as well. Mike, thank you so much.
Awesome, Mike.